on the website?
Yeah, it's, if you go to the Chrome homepage, you should see, at the top, will say like, depending, I don't know if they're doing it through mobile or on their desktop, but you should see, it says Board of Ed, so at the top, and then from there you'll see BOE committee meetings and video archive,
Okay, thank you.
and then it'll show right there.
All good? Thank you. Okay, welcome everyone to our November 8th, 2025 Audit Facilities and Operations Committee meeting. We will begin with public comment. If there's anyone from the public that would like to address the committee? No? Okay, seeing none, Mr. Silver, I will turn it over to you for the purpose of the external audit.
Okay, I don't think I'm on camera, but that's fine. So with us is Melissa Zopp from O'Connor Davies. She is presenting the external audit for the 24-25 school year. Following this, we will be submitting this to the state before the 15th, and the board will see in public. There'll be a presentation of this on the 18th, at the board meeting of the 18th. Okay.
Okay, great. So thank you for having me today. We're going to go over the results of the external audit. My name is Melissa Zopp. I was the engagement partner. We were new to the school district this year, so it's our first year part of the external audit process. I went ahead and prepared this PowerPoint slide. It has all of the information from the financial statements. I just like to prepare it's a little more digestible since the financial statements are quite long, so I find this a little bit easier. So today we're going to cover some required communications. We'll start at a higher level of your general fund, just a summary of where you guys ended up at June 30, 25. Then we'll dive a little bit deeper into your revenues and your expenditures, exactly what happened to get you there. I prepared a 5-year general fund balance schedule so you could see where you came from to where you are today. And then the school district does operate other funds, so we'll go over those fund balances. And then there is some long-term debt, so I've provided that schedule for you as well. So just some communications here. As part of the external audit process, there are certain responsibilities that management and those charged with governance has. Those charged with governance would be the audit committee as well as the full board. Making sure that the accounting policies are selected and implemented appropriately, the financial statements which you have in draft, ensuring that those are prepared in accordance with the United States generally accepted accounting principles. Internal controls are important at every organization, so making sure that you establish good controls and then do a periodic review to ensure those controls are maintained appropriately, provides a good checks and balances. Compliance with all of the laws, regulations, and any provisions of the contracts that the school district enters into. The financial records that we request as part of the external audit process, it's quite voluminous. We have a lot of back and forth between the business office. We do select a preliminary request list, and then we select samples from that. So it's a lot of back and forth. So I just want to publicly thank Mr. Silver, Ms. Haywood, and the entire business office just for the support. As our first year, sometimes it could be a big hurdle to kind of get all the information, to get the historical information. So it was quite smooth this year, and I just really appreciate all their efforts on that. So. And then the most important part of this audit process is just making sure that there's a proper tone at the top, making sure there's high ethical values at the school district, and that's communicated down throughout management. So not only do you have certain responsibilities, us as your external auditors have certain responsibilities. The deliverables that you have in draft form, the first is the independent auditor's report that's included in the financial statements. We do anticipate issuing an unmodified opinion that is referred to as a clean opinion, if you've heard that terminology. It is the best opinion that the school district can receive. The second is the Yellow Book report. That's the report on controls and compliance. That's also included in the financial statements at the back. That would be just the control aspect of the schools. The extra classroom activities report is going to be the smaller report, stapled. That would be the activity of all of the student clubs. So it would be opening the activity and then the ending of the year. And then in one document, we have for you the required communications to those charged with governance and the management letter. We will be going over those comments today in detail as well. And then lastly, the report on compliance for the federal programs. Currently, we cannot issue the single audit, the federal single audit, because every year the Federal Office of Management and Budget issues a compliance supplement, is what they call it. It's just a big document that allows us to provide us steps on how to audit each individual program. Currently, we have it in draft form, and we have done a lot of the federal single audit procedures. But until they issue that final, so draft into final, we cannot issue the single audit, unfortunately. With the government shutdown, I don't think that that's going to be finalized anytime soon. But we are on top of it, and once we have it, we anticipate issuing shortly thereafter.
Does not having that file impact our state aid or federal aid made for?
No, so it won't impact your state aid because that will come, as long as the financial statements are uploaded by November 15th, we should be good. For the federal aid, obviously there are things up in question on what they're gonna fund, what they're not gonna fund. Yeah, yes. And I mean, unfortunately or unfortunately, every school district, really every entity is in the same boat as you guys are.
Yeah.
Your single audit is due March 31st, so we have until then to finalize. I'm hoping that the final compliance supplement will be issued by then, because I would like to get this out before then. But what we'll do is once we do issue that, I'll prepare a separate report for that. We'll have a separate communication document. We can always come back and let you know how that went. Or we have Ken communicate that as well. So that's up to you.
And just for those listening at home, Ken, my understanding is that direct federal aid is actually a very small percentage of our budget compared to state aid.
Very small. It's related in some ways to some of the grants and then to some of the food service.
Yep.
We're fine.
Thank you.
We are required to communicate any fraud or illegal acts that were noted as part of the audit, and I'm happy to report that there were none identified. We did not encounter any significant difficulties as part of the process. There were no uncorrected misstatements, so any adjustments we found were posted, and there were no disagreements with management. As far as the timeline of when we were out here, we do the preliminary audit. That's where we focus on the control aspect on June 5th. The field work is where we look and test out all of the balances, including the financial statements. We were here the week of September 8th. And then I did want to put here that this is the latest that the state has issued their pension information. One of the things that we need to wait is for their teachers' retirement system information to be issued so we can incorporate that into the financials. And so that wasn't issued until September 8th. So the latest, but we were able to receive it, but we're able to still make that, which is good. So let's move on to the numbers of the general fund. So this is going to be a 5-column schedule. The first column is your original budget. That would be the budget adopted by the voters. It also includes any prior year purchase orders. So any purchase orders that were not fulfilled last year, that budget got rolled into your 24-25, increasing the buying power. Your second column is going to be your final budget. So if there were any budget transfers, any budget amendments, that would be included in your final budget column. Your actual results are your third column. Your encumbrances, that's going to be your open purchase orders at June 30, 25. So that $3 million will roll into your 25-26 budget to increase the buying power then. And then we have a variance with your final budget. So starting at the top with your revenues, you anticipated, you budgeted for about 141.6 million to come in, and you had 146.2, so about 4.5 million better than what you anticipated. As we go through this PowerPoint, you'll see that most of that is related to interest income and state aid, which is good, so that came in higher. Your expenditures, so the money going out of the school district, you budgeted almost 143 million, and you actually only spent 137.4 million. If you factor in the encumbrances that are earmarked for certain purchases, exclusive of that, you have a budgetary savings of about 2 million, almost 2.1 million. You have some other financing sources and uses that would be transfers between funds. You did have, you anticipated a transfer in from the capital project fund that did not happen. And then you did actually transfer money to special aid fund for the local match of your summer handicap. So that ended up being about $437,000. If we look at the third line from the bottom, your net change in fund balance, in your original budget column, that 1.17 million, that is solely representative of your prior year purchase orders. So that got rolled. So that's what you anticipated through the budget process and the encumbrance process of what you anticipated using of your fund balance. If you look at the actual results, instead of spending or using your fund balance of 1.1, you actually added 8.3 million to your fund balance.
So it's a substantial difference.
It is quite different, yeah. So on a budgetary, if you look at the last column, it's about 6.4 million budgetary surplus.
Yep.
We did have a restatement of fund balance of I think it was about $3 million. So your opening restated was about 28.9 million. The restatement was solely related to some long-term medical incurred but not
Yeah,
reported
benefits that were-
claims. Those should really be on the long-term piece, so we've included that in the long-term and taken it out of the general fund.
Let's make sure they know what that is.
Sure.
So you remember the board approved the transfer of what was listed as $3.1 million in debt. It became $3.1 million in asset because it had been classified incorrectly by the previous auditor.
Yep.
And so that adds to our fund balance. And so Melissa, I guess we'll be talking about that in addition to that $6 million. We have that as well.
Right,
Right,
correct.
for a total.
I just want,
Right.
I just couldn't, I just looked like you weren't sure what that was, and I just want,
Thank you.
the board already approved
That
that.
helps a lot, yeah, I remember the discussion at the time, my understanding is these were things where we felt that long-term insurance expenditures coming up, we had to budget entirely in advance and encumber, and
Well,
actually
It was listed as a liability, but it should have been listed as an asset in the end.
At the end of the day, you don't know when those claims are gonna come
Right.
in, and that's really challenging, and whatever's recorded in your general fund itself should be, you should know what that dollar amount is, that claim
Yep.
should be filed, it should be due shortly within a year.
that makes sense.
So because we saw that, and it was obviously a large amount, we wanted to put that and reserve it on the district-wide financial statement, so you'll see it as part of the long-term debt pieces. So you did end the year at 37.3 million. I do have the buckets here, but we do have a separate slide in the PowerPoint where you are at the 4%, which is the maximum that you can be at. You have the restricted piece, you have encumbrances, and then you're unassigned. So let's move on to the revenues. We'll show you how we got there. Just pull this up a little bit. Should be good. Okay. So this is gonna be similar columns as the previous. We've added a prior year column just so you could see year over year, the changes there as well. So first line and your largest revenue source at the school district is your real property tax revenue. You anticipated 95.3 million, you received 95.3 million. You did have about 14,000, those were some tax certiorari's as well as some other miscellaneous adjustments, but it would come in as anticipated. Your school tax relief reimbursement, that would be your STAR reimbursement. That came in as budgeted as well. You can see just comparing from last year, your real property tax went up, your STAR went down. Overall, between the STAR exempt and the STAR credit, that program, I believe the exemption ended in 2016, but it was some years back. And so now it will just flip-flop between the two. So ultimately, it's just the way that the STAR checks are being distributed. So it just depends on if they're on the real property tax line versus the STAR line. But overall, if you look at them as a whole, they're consistent.
Do we expect any impact on STAR looking at housing inflation in the area? Because there is a cap for how much property value and there's a cap for how much income. In principle, people can still receive STAR. Do we expect that to affect these numbers going forward, or do we expect it to be about this?
I would expect it to continue to go down for the STAR reimbursement, just because as homes turn over, they're no longer gonna fall in that line, they're gonna move to the real
Exactly.
property tax line. So, as the market continues, we know interest rates are going down, so people might sell. I don't think it would change with the refinance, but, usually what I've seen as a trend is the STAR line will go down, but that will fall into your real property tax revenue. So you'll still get the money, you'll still do the
Right, just-
levy, just depending on the line item.
Understood, thank you.
Mm-hmm. You have a small amount in your pilot piece of about 4,900. You have some interest and penalties on real property taxes that were collected. Your charges for services came in pretty in line with what you anticipated, just a little bit under about 1,000. Under that would be your day school tuition for other districts. The largest, one of the larger lines on here is your use of money and property. The school district, that would solely be your interest earnings. So the school district's currently invested in NICLAS and NILAC. They're municipal pools, and they get really good interest rates. A lot of their school districts are in either NICLAS or NILAC. You guys are actually in both, so you have some in both. Last year, NICLAS and NILAC were earning about 5%. This year, they were earned about 4.2%. So if you have the money, it's a good place to invest it. It's very liquid, so you can pull down from it to pay your bills and everything. So since interests were higher last year, and especially the year before that, this is a good time to get that interest earnings accumulated, so you could help build up your reserves for future projects or other reserves that you want to fund.
And this was, Ken, I believe we discussed this at the beginning of the year, that in the previous year's budget, this had been under accounted.
It was under budgeted
Under budgeted,
at 200,000 when they had made almost 2 million the year before.
Right.
And so this is what we earned is what we should have earned. It was just the budgeting number was wrong. And so that's why this is such a big gap. And that's part of the additional revenue that we won't see that much this year because I budgeted
Right.
much higher
If
in
you get it right
current
the
years
first time,
to
you know.
try to be
Yeah.
realistic. Yeah, you only get it once.
Yeah, and it's definitely a hard thing to budget. I mean, most of my school districts do budget relatively conservatively, just because interest rates fluctuate.
Yep.
I know that they will be going down, or what we've heard is they'll be going down in 25, 26, but we don't know really how much it will be, so.
And we have already, we're in the current year, we're safe on that, and the next year, we're gonna be safe. I've also accounted for the reduction in interest rate going forward in my projections.
Great.
Thank you.
Let's see, you have a small amount in your sale of property and compensation for loss. That 66,000 was solely related to insurance recoveries, which is good. And then your second largest revenue line is your state aid. That would include your basic aid, lottery, BOCES, textbooks, that kind of thing. State aid is really a formula-based revenue source that's provided by the state. We have seen that it has increased about 2% year over year. I know you did about almost 2 million better than what you anticipated.
Unfortunately, they can't all be election years.
Right. Right, and it is difficult to budget too, just because of the timing of when they say
That's right.
what they anticipate their increase to be.
Yeah.
So I did note that last year it was a little bit lower, about 39 million. You did have about 470,000 of overpayments deducted last year, whereas this year you only had 20,000. So that would increase your state aid as well. So good to keep that up, hopefully. Your federal aid is going to be some small Medicaid assistance that came in relatively in line with what you anticipated. And then the last line of your total revenues is going to be your miscellaneous. That'd be everything else that doesn't really fall in the other categories. You had about 1 million that came in, so about 660,000 better than what you anticipated. Of that 600,000, or really of the million, about 450,000 was related to a refund of prior year specifically for BOCES. What ends up happening is you have to accrue for certain liabilities that you anticipate to pay out BOCES. BOCES takes a while to invoice. It could be different depending on the numbers that they calculate. So once the invoices come in, it's good that the school district does it a little bit conservatively, but you have to write off the difference, and that's the line that falls
So
into.
just so you know, that's not BOCES aid. This is a refund from BOCES, two separate things. This is when they don't need all the money they have gotten from us and others, they divvy it up and it comes back to us. Also, part of that this year was money they had been holding on to for a number of years that they gave us this year. That's good enough, sorry.
No, that's okay, perfect. Okay, great. You did have, like I mentioned at the start, the other financing sources transfers in that you anticipated having capital projects fund transferring in 150,000. Generally, if you have a transfer in from a capital projects fund, that would mean the project has been closed, it was funded solely through general fund, and it would come back to the excess or whatever would be left over would come back. So didn't need to happen this year. So that ends up making up the 4.4 million budgetary surplus that we saw at the summary. We'll move on to the expenditures unless anybody has any questions on the revenues. So these are the expenditures. In the financial statements, the expenditures are broken out by function, so general government support, instruction, transportation. I've categorized them here as well, but I've identified the larger items that we're going to speak to, and then the other is just the group of the smaller pieces that make up the variance that we're talking about here. So your first line in your general government support is going to be your finance, your business administration. You can see from the variance with your final budget, it's about 55,000, almost 56,000 of a budgetary savings. So still pretty good in line with what you anticipated. And most of that, about 44,000 of that 55,000 was related to some savings in clerical salaries. The staff personnel line, that's your second line, you had about a 58,000 budgetary savings. Again, that was also related to some clerical salaries as well.
Were these positions that were empty, differences in overtime, or having
Unfilled,
unfilled positions?
So budgeted for, but not.
yes.
Okay.
There's two lines under central services. Your operation of maintenance and plan, that would be the operation of the facilities, as well as maintenance of your facilities. So that comes out budget-wise at 6.7. It actually came in about 6.5. You do have a large amount of encumbrances there, 580,000. As we mentioned, those are the open purchase orders. Generally, you'll have some purchase orders open, so you could do some work over the summer. And let's see, so your encumbrances relate to some repairs and maintenance. So like whether it's working on your boiler, some flooring, heating, that kind of work. As well as some health and safety supplies that will be purchased into the 25-26 year. You can see that there was a decrease. So last year there was about 7.2 million. This year it's about 6.5 on that same line. So about a decrease of 700,000. There were some larger repairs last year that just didn't need to happen in 24-25. So that would be the result of the decrease. Your next line is going to be your central data processing line. This would include your computer supplies that are not related to instruction. You have a separate line for your instruction computer supplies, and then the corresponding salaries that work on that as well. That came in relatively in line with your budget, about 27,000. And your original budget was about 1.6. It did drop a little bit to 1.2, but again, you came in line with that. Next is going to be your instruction. Your instruction is going to be your largest expense line. As a school district, you would hope that that would be your largest. It would benefit the students directly. Your teaching regular school, you budgeted about 38.1 million. That did drop slightly to 37.7. You have some encumbrances there, and then you have your variance of about 275. So you did have a budgetary savings. Just talking overall in this dollar amount, you have of the 37 million, about 96% of this is salary related, just because of all the teachers that you have at the school district, as well as other instructional items.
The 270, approximately 275 in savings for that, was that due mostly to retirement incentive offered over the past 2 years, or are those unfilled positions?
So you had about, the savings was about 160,000 of that,
Mhm.
270 was
Okay.
related to salary savings, specifically in school monitors and clerical positions.
Mhm.
And then 100,000 was related to supplies, textbooks, and other equipment rentals. So it was a kind of twofold of that
Remember,
savings.
John, we moved the monitors,
Mhm.
we moved the monitors from the general fund to the cafeteria fund. That was a big part of the savings in that year.
Excellent. Thank you.
Yeah, the savings are great. It's always striking that while the vast bulk of the salary expenditure comes within the largest bargaining unit, the savings seem to have been from some of the smaller and less paid bargaining units.
Mhm.
Thank you, Jeff.
The next line is gonna be your programs for students with disabilities. That came in on your actual about 19.2 million. Just the breakout of that, about 64% of that is salary related, 14% is tuition, that's paid out, and then 22% is for BOCES services. So that's just the breakout of that line item. You do have encumbrances of about 1.5 million that is related to tuition, that will be paid out. And so that, again, that budget will roll into next year. So if you factor that in, you're actually pretty in line with what you anticipate, and what you budgeted for. The next line is your instructional media. Your instructional media includes your school library audio visual, as well as the computer assisted instruction related. So we have the computer for the general, this is the computer for the instruction piece. So the savings of the 55,000 that you see there, that was split into two, about 20,000 of that was BOCES specific, so services that didn't need to be paid out for the 20,000. And then the other piece was kind of a conglomerate of supplies, salaries, and repairs, so just items that didn't need to be spent in this year. Let's see, so for the next line is your pupil services. Your pupil services includes things like your guidance counselors, health services, social workers, psychologists. So just hearing that, a majority of that, 90% of that is salaries as well, because that provides services to the students. You do have some encumbrances there of 135, so those purchase orders will be fulfilled in 25-26. And then you had a savings of 68,000 again, since most of those are salaries, the savings would be in the salaries piece as well. We'll move down to the transportation line. Your transportation line includes your transportation services, so that would be salaries related as well. And then it's 86% of salaries. And then you have the garage building, which include your mechanics, utilities, so your fuel, that kind of stuff would be included in that line item. You did have a savings of about 244,000. 180,000 of that is specific to supplies related to bus parts, and then some fuel. So you did actually have some savings on the fuel that was that you needed this year. Your community services, that's your youth programs, that's solely related to your school resource officer from Putnam County. So that was about you budgeted 400,000, you spent 263. So you do have some purchase orders, again, that will be fulfilled in 25-26. But after that, you're pretty in line with what you anticipated.
My understanding is we're finalizing the pricing for that for the year to come, so.
It's finalized. The attorney is just reviewing the contracts with the county. That will be on the agenda for the 18th.
Great, look forward to seeing this.
Next line is gonna be your employee benefits. As we know, your salaries are very large at a school district, so the fringe benefits would also be pretty large. I think in total, your fringe benefits are about 40 million. The largest savings you have there, you can see is about 1.1 million was related to your hospital and medical dental insurance. That savings is solely based on the timing of the rates. You have to anticipate what you think the rates are going to increase during the year, and then later on after you've budgeted, those rates will come out. So it's challenging to budget that. You'd want to budget relatively conservative, so you'd have that flexibility, but that's really the cause for that savings. And then your debt service. So your principal and interest, in total, about 6.2 million. Included in there is gonna be the payments for your serial bonds, so that's your outstanding general obligation bonds, your outstanding energy performance contract. You do have some leases for some equipment that you're leasing, and then your finance purchase, that would be your buses that you have. So that would make up, as we talked about, the savings of the 2 million, that kind of makes up a majority. You could see the largest item of the savings is your hospital, medical, dental insurance, and then it's kind of the rest of the savings are scattered throughout the different line items. Any questions before I move on to the fund balance?
Any questions from the audience?
Okay. What I did is provide you the general fund balance. So as we talked about, the school district is at the 4%, and we said that there's different buckets that the school district has. I do like to provide a 5-year. I think it's nice to see where the school district has come from 21 through 25. There are 3 different buckets. So your first bucket is your restricted. Restricted fund balance would be legally restricted through either education law or general municipal law. So you have some categories there. That totaled to about 28.3 million, almost 28.4 million. Your tax certiorari reserves, that would be specific on certain tax certs that are currently pending. We do test that to ensure that there are pending claims substantiated to support that $3 million. So that may come to fruition, it may not, but what's nice is you have that set aside. So that way, if there is something that is settled, you're not impacting your current year budget. You actually have something set aside for that.
And I see that's expanded by about 50% in the last 5 years. Is what's striking that?
So it would just be based on the tax certiorari claim. So if people want to challenge their assessed valuations, they would go through that process. Generally, that would be with the town, and then that once that gets settled, that would filter on down through the school district, because since they're taxed not only on the school district and the town rates as well, so that would impact everything. The tax certiorari is categorized by each year, so you're allowed to have 4 years. We've seen that because especially of the pandemic, the courts were shut down for several years, so there's.
We've also had a major reassessment in several of our communities.
Exactly, yeah, so that could potentially impact it also. So if people are starting to, if it's been reassessed, it's been higher, there might be more tax certioraries coming down the line as people see what their tax bill is gonna be and then wanna challenge the assessed valuation. So it's always good to set aside money there. You don't want to have a small amount and then next thing you know, you have to pay $1 million settlement and you'd have to find where to pay that out of your current budget.
And was this impacted by the settlement with the city over the water supply lines? I know there was it's somewhat conflicted, some amount of conflict over the exact amount of it there.
I don't believe there was anything paid out substantially in the 25 years, so I'm not sure if that would come up
So
in
that's something that will come up
the
in the future.
future.
Yeah, that's not part of this.
Yeah, it's definitely something to look out to, and if you wanna reach out to locally the town to see if they have anything, because you could factor that in and increase the reserve to prepare for that too.
Yeah.
Like I said, because the tax certiorari reserve is set up by year, so let's say that assessment gets passed, every year they go back and try to reassess how much you have to pay. So the $3 million is broken out between 4 or 5 years, so you can pull from those up until they're fully liquidated. The next line item is going to be your TRS retirement contributions. So that jumped up from 3.5 to almost 4.4 million. That would pay any TRS retirement invoices that you have. That did increase that 700,000. That was a resolution that came through the board and was approved. Oh, and I forgot to mention, all these can be allocated interest. So we did allocate about 4.8% interest to these as well. The next line item is your insurance. So that is almost 7 million. That did increase this year about 3.3 million, and then interest on top of that. Your insurance is pretty high for the expenditure line item. So what's nice is you'll have a reserve set aside just in case you are self-insured for medical, right?
Yes,
Medical claims.
we've already proposed, as we have discussed, using a good portion of that reserve to offset next year's insurance costs. We've talked about that
Yes.
as well. The board, everything that Melissa's talking about was already approved by the board at a public meeting.
Mhm. But it's good to have this reserve set aside as well, just in case rates skyrocket, you'll have this as well, so it's not impacting the taxpayers in one year.
Yep, but I understand the driver of spending it down a little because the amount in reserve has doubled in the last year, it's increased that.
Well, part of that is the new insurance reserve that we just, no, that was a repair reserve. No,
Mhm.
never mind, take that back.
The next reserve is gonna be your employee benefit accrued liability. You might hear that sometimes referred to as EBLR reserve. That's gonna be related specific to your compensated absences payout. So as employees retire, they might be due time.
Yeah, the bench
paid
vacation.
out. Exactly. So if this helps offset that, you don't wanna have, 10, 15 people retire, have to impact the general fund as well, so you can pull from that. New this year is your repair reserve. As Ken just mentioned, that was funded for $3 million this year. As we mentioned, repairs come and go. It's kind of unexpected. That's also something that you would want to have some sort of reserve set aside. It is a very restricted reserve, so it is to be spent only on repairs, whether it's emergency or some other repair source. So it cannot be used for anything else other than that. But it helps, so just in case something breaks and you anticipate it might be a tighter year, you can pull from this also. And then lastly is your future capital projects reserve. So that just increased by the interest. So that's $4 million. This is a good spot to look at. I believe you can't add any more to it, correct? Besides interest.
Only interest can be added. It had been anticipated that would be gone 10 years after its inception, which was right now.
Mhm.
And so it can be used for whatever we want. We've spoken about using that for perhaps improvements to the bus garage as a capital project, but you can't add to it. It can only be used.
So this was established 10 years ago?
Yes.
Okay.
But it has grown. Essentially, it was never used,
Mhm.
and it's just grown. And so we should use it. There's no effect on the taxpayers. It's sitting there, and it should be used instead of doing capital projects through the budget where it affects the taxpayers. This is just money that's set aside that can be used. And it's also aidable if we do capital projects.
I think what's good too is, obviously since you can't add to this, it could be something to consider in the future about establishing a new reserve. You'd have to go to the voters to get a proposition for that and have that approved by the voters. But what's nice about that is because they're such a long period for 10 years, you can fund it over time. I would take a look at the facilities that you have to see if there's any major projects that you will need in the future. And then you can set up a new reserve for that. You could fund that over time and then you won't have to go out to bond and then have interest payments incurred for that as well. So something to consider for the future also. So that's your total restricted of the 28 million. The next bucket is going to be your assignments. Your assignments are internal assignments, so things by the business office, which in this case, it's going to be your purchase orders. The 3 million, you've heard me mention several times, that's going to roll into your 25-26 budget. So next year when I'm here, you'll see that amount there also. And then that leaves your unassigned. So about 5.9 million of your unassigned. That is what is considered free and clear. That could be spent on school district items. Nothing really is restricted on that. So if you look at that first line of the percentage, your total fund balance, so that's going to be your 37 million over next year's budget. You're at about 25%. So just looking back to 21, you were at 12%. You increased it all the way to 25% while still remaining flat on the 4% of your unassigned. I think that's pretty good. Generally, depending on how many infrastructure needs at the school district, you could be anywhere from like a 15% to 20%. It could be higher if you have higher infrastructure needs, because we'll usually see a large portion of that in your future capital project line. But you are at the 4%, which is where you want to be. At the bottom of this, you can see that there's use of reserves for the 25-26. So all of those restricted reserves with the asterisks next to them are anticipated to be used as part of the 25-26 budget that was approved. So it's $100,000 for TRS, $100,000 for insurance, $500,000 for your EBLR reserve, and then you anticipate using $850 of your capital project. Okay. So let's go to the other funds. So first is going to be your special aid fund. Your special aid fund is going to house all of your restricted grants. So they are restricted to a specific population. That fund should be self-sustaining. So we anticipate all of the revenues coming in should be fully spent by the end of the year, just because that is so restricted. Your revenue sources, about $4.2 million, that would include your federal aid and your state aid, as well as some miscellaneous local aid that you get. You did have to transfer in from the general fund about $437,000. Your summer handicap does have a requirement to have a local share, so that's the general fund portion. And then again, we mentioned your expenditures, which should match those two. The next is your capital project fund. Your capital projects started at about $2.2 million. Your other financing sources would be some leases that were issued this year, so some equipment that was leased out. And then your expenditures would be any capital outlay that you had, so it's adding to your capital projects and moving those forward. So you ended about $313,000, and that is entirely restricted to be spent on those specific projects. Your school lunch fund, that would be your cafeteria operations. Your school lunch fund should also be self-sustaining, so we would expect that to be relatively flat year over year as far as your revenues versus your expenditures. So that's where it ended up. Your fund balance started at $890, but you ended at $749. So that's a
I want to comment on that.
Sure, please.
That is down from the year before, but let's look at what we did. We've assigned electrical costs, fuel costs, all the monitors we moved into that fund during that year, and we're still pretty good. So we're now talking about replacing the cafeteria tables in the middle school with some of that fund balance. We're no longer subject to a corrective action note on that, because you're allowed to now keep 6 months of reserves, meaning the equivalent of 6 months of expenditures you're allowed to keep as a reserve now. It used to be 3 months. Am I saying that right?
That's correct.
And so we're safe there, but we do want to use some of that money to improve the cafeteria. We have no other plans. You should also know that out of last year, we also we put air conditioning in the kitchens from this fund. So there were some substantial expenditures, and yet we're still pretty good. Okay, sorry.
No, please. And do you guys understand the 6-month requirement and why that's in place? Okay, perfect. The next fund you have is your special purpose fund. Majority of your special purpose fund is going to be your extra classroom activities, so they are recorded in this fund here. So you started at about $300,000, you ended about $289,000. There are some smaller miscellaneous, whether it's scholarships or other contributions that would flow through here. Anything in the special purpose fund is entirely restricted for the benefit of either those clubs or the scholarships specifically.
So clubs and scholarships, but field trips and other activities don't fall under here, or?
If the field trips are related and fundraised through the clubs, then that would fall in here.
Understood.
Like the booster.
Yeah.
If it's general fund, there are field trips budgeted in the general fund, so that would fall through the general fund.
Understood.
And lastly is your debt service fund. So the revenues included in the debt service are going to be your interest earnings. So that's all going to be your interest. The $1.9 million you would wanna just kind of keep an eye on that. This is something you can use to help pay for future principal and interest payments. If you issue any premiums that you're not using as part of the bonding process, you're not gonna use as capital projects, that would fall in here. So this is entirely restricted just to help pay for principal and interest, so it could help relieve the burden of the taxpayers for that also. Okay, great. So let's talk about your long-term debt. I included in here is the debt of the school district. This would include your general obligation, bonds payable. You have outstanding about 18.4 million there. The interest rates on those kind of vary. The lowest interest rate you have is about 2.8%. The highest is about 5%. So it's still pretty good in the market that we're in. Your energy performance contract payable, you do have three of those, totaling about 6.5 million. Those rates are pretty low, so about 2.3 to 2.5%. So that's pretty good there as well. Your leases payable, that would be the equipment that is leased out. There are several of those ranging that were issued in 22 through, there was the new one in 25 that we've mentioned. That totaled about 1.4 million. And then your finance purchase debt, there were 2 buses in 23 that total about 1.3 million. Those will mature in 2028, and those are about 4.5% average out. So in total, just the annual payments that the school district is making on a principal base in total is gonna be 27.7 million. I provided for you the future debt service schedule, so each year you can see it does decrease over time, which is good. As far as the 2026 year is concerned, you're about 4.3% of your total budget. So that's 6.2 million, about 4.3%. That could range again anywhere from 4% to 8%, just depending on, again, the infrastructure needs of the school district. You could potentially issue more debt if you have more projects. So that's why that range can fluctuate.
So with the debt going down substantially, it will be going down substantially next year, and what we've already looked at, each year it goes down, adds to what you can have a bond for without increasing taxes if you wanted to. So we estimate now we could have somewhere around a $23 million bond, should we decide to do that without increasing taxes. And that may actually be a conservative number, sorry.
And I will repeat my constant statement that the fact that we can take a certain amount of debt doesn't mean that we should.
My point was only if there are projects that we need to do, we can do them without affecting the taxpayers.
Of course. But we start from there rather than the amount that's available.
So I think that's it on the numbers. If there's any questions on the numbers, I can answer those before we go into
Just
the.
a quick question, going back to page 8, the unassigned fund balance, so for instance, let's say that you used some portion of the repair reserve for whatever specific item. And could you also use some of the unassigned toward that same item, or it has to be separate from what the restricted reserves can be used for?
So you can use the repair reserve if you have like an emergency that comes up. If your repair is 2.5 million, you only want to use 2 million of that, you can, and then you would just dip into the fund.
So then you could take the remainder from the unassigned.
Unassigned can be used for any purpose. Whereas let's say a repair reserve, when it goes into what we're spending in a given year, it needs to be used for repairs. But the unassigned would just be put in, and then it could be used however you want, as long as it's in the budget. The board could also raise the budget if they needed to by some of the fund balance, but we're not planning that, and we're also not planning to use any of the unassigned in next year's budget. We're not using any in this year's budget either.
Excellent.
So when you go through the budget process too, because to use any of these restricted fund balance, you have to do a resolution that would get approved by the board. So when let's say that you had the repair, you would go to the board, get that resolution. Let's say other 2.5 million, you just wanted 2 million of the reserve, 500,000 of the unassigned. In the resolution, you would specify that. So I want to use 2 million of this reserve, 500,000 of your unappropriated, and that would increase the budget for both of those, allowing you to increase the appropriation side as well.
Unless you planned it ahead of time. If you plan using, let's say, $1 million from the insurance reserve to offset insurance costs for next year, that doesn't require raising the budget. That becomes a part of the budget. Melissa's speaking to, during the year,
Mhm.
if you want to use some of that for some special purpose, you would have to raise the budget.
Thank you.
So next we'll move on to the management letter. I should pull that up too. Give me 1 second, apologies. Okay, great. I just want the viewers to be able to look at this as well. Okay. Perfect. Sure. Where'd it go? Otherwise, I can just go over it through here. Here it is. This is in here. Perfect. Okay, great. So this is a document. This houses a lot of the information that we talked about. The first page is just a letter thanking you for allowing us to provide the service to you. Just the contents of the management letter. And then the second page includes the status of the audit. So we do anticipate issuing unmodified. There is a piece in here related to the federal compliance audit. So what I mentioned about the OMB compliance supplement, we will issue that once that gets issued final. A lot of these boxed areas are information I've already discussed as part of the first portion of the PowerPoint slide. I do want to point out on page 7, at the top, we did implement GASB 101, which is your compensated absences liability. It used to be that the compensated absences was calculated just based on separation of the employee from the school district, how much they're going to get paid out. Now, through the Governmental Accounting Standards Board, they've changed that. They want to be a little bit more comparable with other entities, so you have to now add in it what can they use, or what you anticipate the employees using over the life that they anticipate spending here at the school district. So that did end up increasing. You started at about 6.1 million, you ended at about 17 million, so it increased quite substantially. We have seen that across the board on all of our school districts where they've increased quite a lot. So not something you have to pay out, part of like your annual budget, but
But
it's
it's
a
something we have
county
to
standard.
set aside there for.
Unfortunately, yeah. The other thing is at the bottom of page 8, there are some significant risks. Part of our planning document as well, we do identify 2 significant risks. One is management override of internal controls, just because management has access to so much. So we develop procedures specific to this, and we're happy to report that our procedures did not identify any instances of management override. The other significant risk is improper revenue recognition due to fraud. That's a mandated risk by the AICPA that it's hard to overcome that. So we develop procedures for that as well, and happy to report that we did not identify any instances of that.
So 2 good points.
Yes, very good. Very good. So on page 10 is going to be the letter of our of the controls. I'm happy to report that there are no material weaknesses. Material weakness is the top level of a deficiency, so it's just material to the financials. The second level is a significant deficiency, so it just doesn't raise to the level of a material weakness. I'm happy to report there were no significant deficiencies either. We do have some control deficiencies, which are just things that we know, best practices in activity. We just like to make the board and the committee aware of that as well. So we'll go to the first item. We do test a sample of 25 disbursements as part of our audit procedures. Of the 25 sample, there were 3 that did not have written quotes. Currently, the school district policy is any purchase contract between $1,000 and $20,000 needs to have 3 documented written quotes.
Yes.
So we just verified that, and there were, again, 3 that did not have that.
And that was 3 out of a random sample of 25.
Correct, yes. I do want to point out that the New York State General Municipal Law, the range is from 5,000 to 20,000, so the school district is a little bit more restrictive than that. Just going back and looking at the 3 that we sampled, of the 3, there were 2 that were under the 5,000, so if the school district had followed the GML, you would only have 1, but because there's more restrictive, you had 3. But our, recommendation is to continue to follow the policy. You could always look at the policy. If you still feel the 1,000 is necessary, definitely maintain that. If you feel like you're good, you can follow the GML. So something to consider in the future.
Yeah, I think obviously with inflation, this does sort of the meaning of $1,000 changes, but also we've had CFA questions on a couple purchases in the last year. So I think
Okay.
we wouldn't be changing it.
Okay, great. Yeah. I mean, it's definitely good to get the best price possible to just do your due diligence of this as well. The next item is your cash receipts documentation. We do select a sample of 5 cash receipts specific to just the school district, not exclusive of the extra classroom pieces. Best practice is to ensure that the cash receipts are deposited within 72 hours, just so it's timely. We did identify that in some instances, the date that the cash receipt came into the school district was not documented. So it's really challenging for us to identify, was that deposited within 72 hours from the day that it got to the school district. There is a receipt that's provided, so we use that date in order to verify, and so it was a little bit over 72 hours, so we just
And
assumed.
that's 2 out of 5. So
So if we
Exactly.
would use the driver's ed as an example. So the driver's ed took place in the very beginning of the 24-25 school year, right?
Mhm.
So they collect the money and they bring it to the office, but what they brought us was not dated and we didn't date it.
Mhm.
So we don't know whether it was deposited when it should have been or whether it's sat.
Right, exactly. Just verifying that that's being documented every time. So next one is user access to vendor records. So part of our audit is we get a user access report, so it's a permissions report of every employee at the school district. And we look at the employees in the business office, obviously, so the one processing the transactions. And we noted that the business office manager has the ability to create, modify, delete vendor records. That individual also has the ability to process checks, both manual and electronic checks. So this ultimately is an issue. We generally like to see these segregated or at least have the access removed. I believe at times that this person's a backup. So what we recommend, just for the most efficient way possible, you have a claims auditor. Your claims auditor reviews every transaction. So just asking that the claims auditor look at the start of the check warrant that they're reviewing, making sure that that's sequential with the previous check warrant.
Yep.
And that would identify any missing checks, just in case there were any
So
to happen.
That could be the claims auditor or it could be the new person that we're about to hire, the accountant.
Oh, great, yes. As long as there's segregation, that would be good.
Yeah. So someone who doesn't have the ability to actually update the register
Exactly,
would be reviewing the register.
exactly, yeah. Next item is outstanding checks. Part of the bank reconciliation process, you list out the individual outstanding checks that you have. We like to identify anything over 1 year old. Generally, you should be following up on those pretty regularly. Over multiple bank reconciliations, we just summarized how much in total. So there are about 129 outstanding checks that were over a year old. They did amount to 92,000, so they're individually pretty small checks. But just making sure that they're tracked, that they're followed up on, either reissued or sent through the state process to get up to those unconnected checks.
So so some of these go back to 2006.
Correct,
So they've been
yes.
sitting there for
Quite some
19
time.
years. And so we're attempting to get rid of those. The problem is when you do that, you cancel a check, well, they couldn't cash it 19 years later anyway. But we don't get to keep that money. That money has to go to the state as part of unclaimed funds.
Yep.
So there's been no big push to do that because we do not benefit from it, but we are working on reducing that. Certainly, nothing should be sitting out there for 19 years.
Right, correct, yes.
And to the extent there are shorter term problems that can be lost in the total numbers. So.
Well, and it creates more work for the person preparing the bank recs, just continually track these, and it just makes sense to clean it up, makes the process easier.
So it doesn't add to our fund balance.
It does not. It's not. The next group of findings are specific to the extra classroom activities, that's the student clubs. The first one, again, also outstanding checks over a year old. So we identified 22 total outstanding between the high school and the middle school bank accounts. Those totaled about $2,041. So again, pretty small, but still something we'd wanna follow up on.
So these are checks that the activity directors wrote that were not cashed.
Yeah.
And, well, it doesn't affect our fund balance. Have we been, in effect, carrying 92,000 as a supposed credit, you know, as
This
supposed?
is $2,000.
No, I'm
From
still in the
July,
previous, between the two, in principle, we've been accounting every year that there's 94,000 we expect to get, which obviously this one we're never going to.
Oh, the checks outstanding, so yeah, you're carrying it as an outstanding reconciling item. So you waiting for the individual to cash the check.
These are checks we've written.
Yeah.
not what
Okay,
we're
understood.
expecting.
So the previous was received, second, this is written.
Yeah.
Yeah.
But in either case, we've been sort of accounting that as outstanding.
Yes,
Budget to budget
Yeah.
to budget. to
So-
budget.
individually you have them listed out,
Yeah.
so you're just carrying that forward and carrying it forward and adding as you continue to go on, so it's an administrative burden, I feel. Okay, the next one again is timeliness of deposit. We tested 10 in middle school, 10 in high school, and we noted that 2 of the 10 for the middle school account were not deposited timely, so again, within 72 hours, just ensuring that, talking with the treasurer. and the
Everything
student
at the high
club.
school, those 10 were.
Yes.
Well, you know that there were some issues having to do with the middle school activities director or whatever that position, extra classroom person. In that person did not submit records for almost all of last year, all of that year. So that process has now been fixed in the current year.
And the last comment we have is just an inactivity of the extra classroom clubs. So again, we like to report the inactivity of these student clubs. They should be active regularly. We only look at the financial activity, not necessarily if certain
Right,
items
so if
were
they're meeting in
done
the
or.
building, there's no cost. They might still be meeting, but not.
Exactly, yeah. So that's something we don't know, but just to keep you aware. So there were 9 clubs in total. The total cash balances in those clubs total about $8,100. Just making sure that they're active. And if they are inactive, that money would go to the general student organization club to benefit all of the clubs. The rest of the document, these are just on the horizon. So GASB 103 is going to be implemented for next year. Oops, this is specific to the MD&A is going to impact you. It's going to make it a little bit more streamlined. It can be a little bit redundant when you go through it. So it's going to be just very more easy to read, I think, for the community. And then the last bullet is the budgetary comparison information. That's also going to impact the school district. In the financial statements, there is a budget to actual, similar to what I went over today. And in 2026, you're going to have to now explicitly include all of the variances that I spoke about today will be documented in the financial statement. So that way, any community member can go to it, open it up and see exactly why you did a budget amendment or why you had a variance in your budget to actual. So something to keep in mind as you're going through this year. And then 104 is related to certain capital assets. I don't think that will be too impactful for the school district, but it's just something to keep in mind. If we do see something, we'll let you know. These are the corrected misstatements. So I only included the material entries that we identified. There were 3 in total. The first one was related to the IPNR piece. So those claims that were long-term in nature were included in the general fund. The second one was related to your capital projects fund. The 300,000 was specific to your Smart School Bond Act project. The school district did extend the funds, so we want to show and reflect that the school district is owed those funds from the state as well. So that's what that's doing. And then the last entry is related to your special aid fund. The previous auditors included a fund balance in your special aid fund, and special aid fund should not have a fund balance as they're fully spent and earned in that same year. So that would be that restatement. And then that would be it. There's a flyer of us. We'll have the management rep letter, something that gets signed as part of the final issuance process. And then just the flyer, so. And that does conclude my presentation, but I'm happy to take any questions or anything else that anyone may have.
Any questions or comments from the committee?
No.
Any comments or questions from the audience?
Well, I did. So in 2021, when we were looking at the reserves, we had 7 million, right? And then in 2025, looking at the reserves again, we had 4 times that at 28 million. And at no point over the course of those 4 years did those amounts decrease, right? So now we're at a max that we can have in that reserve, am I correct? Right?
No.
No?
May I answer that? So the reserves that you have for the restricted fund balance, there are certain ones that are, that have caps on them, but you're not yet at the maximum. The TRS retirement contribution, that does have a maximum of about 10% of your total TRS salaries. Each year, you can only up to 2%, but you're not at the 10% yet. The other ones, your tax surety reserve would be limited at the total pending claims you have outstanding, which I believe you have just slightly over that, so you're fine there. Your employee benefit accrued liability is maxed out at your total compensated absences liability that you have. And I believe that matches there, but the other pieces, your insurance, your repair reserve, those don't necessarily have a maximum. And then your future capital project, as we mentioned, because that was for a period of 10 years, and that 10 years is over, you can only add interest going forward. So technically, I guess that's at a maximum, but each year you can add interest to that.
Okay, I guess my point is this, if the overall budget goes up, right, significantly, how we're left with at the end of time without providing some impact of relief to the taxpayers, how that the reserve keeps growing, it hasn't gone down. We're comfortable, it seems to be anyway, with the percentages that I noted on the bottom of those buckets. I guess that's just my question, is like at what point does that
So-
enough and at what point does it start to provide relief in the bottom line, right?
That's right. Are we, given the allocation to these, are we using them efficiently to prevent budget increases?
So in my first year here, we were very late in getting this budget started. I didn't get here till January instead of our doing it now.
And we appreciate that.
We did not put that much into the current year. We already have allocated, as I have allocated, over $4 million of the reserves into next year's budget. And so the answer to your question is we plan to use a substantial portion of the reserves to offset expenses next year, to offset tax increases.
That was my point, like at what point are we done saying we're growing?
So we already know there's not gonna be a tax increase for next year. And we're gonna be using at least $4 million of the reserves to offset expenses in the next year. We've already spoken about this.
I think next music to this committee's ears. What you
Yes.
just said, Mr.
Okay,
Sullivan.
that would
Don't
be
go
remiss-
further.
You know what I'm gonna say? I would be remiss if I left this meeting without proposing tax relief of at least a small return to the taxpayers. Because other prices are going up.
That was my point, I just wanted to know at what point is enough, and at what point does it start?
That's good.
But a substantial portion, so we're using somewhere around 10 to 12% of the reserves I'm recommending for next year.
And I know the budget that, work in progress, living, breathing document, the one that we're working with right now over the past 2 meetings or so has, just to your point, shown a 0% tax levy increase.
Correct.
Which I know to everyone listening out there and our audience is welcome news.
Yes, it is. I will repeat that I think with a substantial surplus in the budget, a tax decrease is something that we should strongly consider.
No.
At the end of the day, that decision will be jointly, and
Yes.
we'll get there.
No, but as of right
I would
now,
not say no at this point in
You
this
should be
cycle.
happy right now with no tax.
we are striving for a 0% tax increase, but as previously stated, this document does change daily. And not that it should change greatly, but
And those
that's
will
what we're
be
shooting.
exciting conversations.
They will indeed, but I will say, to quote a former vice president of the United States, we live in the context of everything that came before us. You've often given the history of past tax increases in this district, which have provided a substantial burden,
Yes.
have laid a substantial burden on the public. And I think some of this can be repaired. Thank you.
I'm not on camera.
Yeah, you can. We should put you on camera.
Any other questions from the audience, comments? No? Well, I do want to thank Ms. Saab for your presentation and your firm. We very much appreciate the work that your firm has performed for our district. I know this is your first year, and that was, your firm was highly recommended by Mr. Silver, and we are very
And I see why.
pleased with all of your work.
Thank you.
And Mr. Silver, if anybody's interested in seeing any of these documents, they can reach out to your office, the district
Could we put these
website.
online? Nothing is available until after the public meeting of the 18th.
Yes, we'll issue.
This is
prior
only
to that.
draft,
Okay.
so we'll have the finals for the 18th, right?
Yeah, so we'll go final before the 15th, so you can upload that.
Okay,
Okay, great.
At which time you should be able to upload them, at least to the board docs.
Mhm.
And then they're required to be posted on the website as well, so.
Perfect, thank you.
Thank you.
Thank you.
I'd like to also thank Mr. Silver, who has done a wonderful job making this a much more streamlined and transparent process of coming to a final budget. Thank you, sir.
Mhm.
thank you.
Thank you. Okay. Any
And
other,
thank you for all being here, who was here, and thank you guys for watching at home and paying attention. This is important.
any other business before the committee?
No, sir.
Seeing none, we will see you on the 18th. Thank you, everyone.
Thank you.